Good afternoon, it's Michelle Savage, and we are here for the XBRL US webinar on using corporate XBRL data for financial analysis. I want to thank everybody for joining us today for this program where we're going to talk a little bit more about how to use XBRL data. And we're very pleased to have with us today Campbell Pride and Alex Rapp. Let me give you a little background on both of them. Campbell, for those of you who know Campbell, he is our president and CEO. Campbell directs all of our technology and development efforts here at XBRL US. And before joining XBRL US, he was executive director at Morgan Stanley in their institutional securities area. And prior to that, he was actually a partner at KPMG. Campbell is also a member of the New Zealand Institute of Chartered Accountants. Our second speaker is Alex Rapp. Alex is Chief Technology Officer and co-founder at CalcBench. At CalcBench, he directs their design and development of their artificial intelligence tools, and he has a background in financial services, in communications, and in wireless and mobile. So we're very happy to have him with us today, and what we're going to be covering today is we will be giving you a demonstration of a toolkit that is now freely available from XBRL US. And Campbell is going to be walking you through how to use that, how to access it, and then later on this afternoon we'll be sending a link out, or tomorrow morning actually we'll be sending a link out to that tool itself. And then we're going to turn to Alex, who's going to give a demonstration of CalcBench, which is a commercial data analytics provider that has been developed based on the use of XBRL data, and we're going to be asking him a few questions as well. So from a logistical standpoint, I just want to give you a few points here. As we go through the presentation, feel free to send us in questions by clicking on the question link on your console, and then just keying in your question, and then we'll take those at various points throughout the presentation. We will be sending out the replay to this event tomorrow, along with some links to different programs that we're going to talk about today. So with that, I'm going to actually turn it over to Campbell, who's going to talk to us about something that we're calling the Data Analysis Toolkit. And this is a link to the toolkit, and we'll obviously send that out to you as well. So Campbell, I'm going to make you a presenter right now. And so you should be able to share your screen.
Thank you, Michelle. Thank you, everyone, for joining today. So today, XBRL US is releasing a first set of APIs to access XBRL data. One of the things that XBRL US has been doing is been collecting XBRL data that's been filed by public companies since 2009, and we've got a large database of all that data. And one of the things that this initiative is targeted at doing is making all that data available to any users who want to come and take that data and analyze it. So to do that, we're releasing all that data as part of this data analysis toolkit, and this should be able to, if you want to look at XBRL data, this should make it very easy for you to be able to do that. If you're a developer and you want to build a tool around it, you can look at these APIs as well and start thinking about how you could also do that. A lot of what we're doing with the toolkit is we're making this openly available to folks, so anyone can use it. There's no restriction on how you use it, so you can build little software around it. You can do whatever you want with this information. As part of that, as we walk through that, you do require a key which is going to be freely available, and the reason for that is just to prevent people from downloading massive amounts of data, which we don't really want them to do, because one of the things we're going to be releasing at the end of this month is another toolkit, which is really is more how would I go about taking all this XBRL data and building a data store within my own environment. So if you're interested in doing that as well, please hold on. We're going to try and make that available for folks in the next couple of months. So first what we're going to do today is just look at the API itself and what it can do, and then we'll look at how it works and where you can get documentation. So a lot of you may not be familiar with what an API is. What this is just basically is a way for you to request information over the internet, in this case, and then be able to pull that data into an application or into a tool that you can view that information in. And one of the things we've done is put up some example templates that's part of the data analysis toolkit, and one's in Google Docs and another one's in Excel. And what we'll focus on today is just looking at some of the, how you can use this data in Google Docs. Google Docs is a spreadsheet program, which is an online program, which you can basically do very similar features to what you can do in Excel. And it's particularly useful for this because it's all online. It makes you can get a lot better integration. You can do a lot more things a little bit faster. So that's what we'll work through today. So as part of the toolkit, we've provided a number of templates, and one we've just done here is a very simple margin analysis, just so you kind of get the idea. And we've got a lease calculation worksheet, and then we've got some kind of balance sheet comparison. The point of this is to show you how you can use the API to basically pull data into a spreadsheet. So here's a very simple spreadsheet where you just whack together in a couple of hours just to show how you can do an analysis, a net income, a net margin analysis using different companies. Now, one of the things that the way the API works is basically you request information, you say what's the information I want, and then the API will return it to you. It's like you can think of it like a waiter at a restaurant. You make your order for the meal, and the waiter runs away, and they go and make it, or the cook makes it, and it comes back to you, and then you get your meal. So that's what's happening here. And the way that we've put it into these spreadsheets is we've put some, in this case, we've just put some functions into Google Docs, which allow you to pull that data, and it's very, very simple. So I can walk you through this. The way the spreadsheet, just for consistency, we've put this together as in green is attributes that you can enter. You can see here we've got tick symbols, and then basically when you put a ticker symbol in it, it's like the traditional way that you usually see requests in a spreadsheet that it just updates the information related to a particular company. So here we've got Accord Brands, but let's change this. I'm just going to change the ticker to Apple, for example, and then it just updates the data. Now, when that data is updating, that's being pulled from the API, so we can have a look at this. There's 5 APIs that we're making available to use, and we're just going to quickly walk through those. So you can take these spreadsheets, you can make a copy of them, and then you can do your own analysis with it. So the first thing you want to do, yes, Michelle. I'm sorry.
Cameron, we've been asked to make the screen a little bit bigger. Is that something you can do? So we can just show, even if we just show a partial screen, but show the section that you're working on?
Sure.
A little bit bigger?
Is that better?
Yeah, I think that's better. Thank you.
And we'll just look at a couple of these. So we have some functions, and you can see these are custom functions that we've put in, same that you'd see in Excel, for those who are familiar with Excel. And we'll go through a couple of them. The first one we're looking at here is we have this function that we've written, and basically what it's doing is it's calling the API, and the API is in what's this thing called the URL, which is basically, it's just like a web link. And this is the guts of it here. So we can see here it's calling XBRL CIK lookup, and you pass it the ticker, which is in C3, which is Apple. And so what this does, one of the things you want to do, obviously it's very hard to remember the CIK of a company, so we've provided this API. So what this does is you can put any ticker in, and then it'll give you back the CIK. All the data that we're making available is indexed based on the CIK number, not on the ticker. There's a couple of reasons for that. The first is all the data that we have in the XBRL database is basically information about the company. So you can have multiple tickers for a single company. So what this API does is it just resolves that and tells you given a ticker, what is the company. And that will return, and that basically will return the CIK, as you can see here. Then the second call we have that brings back this 58 billion, sorry, is basically something called XBRL values. And this API is basically allows you to pull back, you can put a number of different parameters in. So we look here, we can have a look at what we've got. You can pass it things like the CIK, which we are in this case. You can pass it the period. You can pass it the year. You can pass it how many years of data you want. And there's a whole bunch of fields that you can see here that are described in the function of what you can pass the API, and then it'll pull back various data for you. So in this case, the 58, we're asking for revenues, as you can see here, for this CIK, which happens to be Apple, for the second quarter for 2015. Obviously, you can change these. All of these cells are referencing these values in green. If you change them, then this value will change. So basically, all of these cells here are using this XBRL values API, and it's basically calling that all those values, so we can get all the values for all those companies. And you can see that you can just copy them across, which makes it pretty easy. Now, one of the things you see here at the front of this is XBRL values requires this URL, which we're passing to the API. In this case, we have at the bottom of the spreadsheet. So if you go and look at this, you'll see we basically have just built it up here. So this is the URL, and this is basically using a couple of parameters, and then we add on to it. But one of the parameters we've got is the API key. To pull any of this data, you're going to need the API key. And if you want to get one, you can come to our website, and then you can basically get that key to pull this data. And then you just pass that as part of the URL, and then when you pass that through, then you request to put the parameters in that you want, and it'll pull the data back for you. So if we look at, I'm just going to show you where that key is. On some of these, we have a link to it. I'll just show you where that is on our website. So basically, this is just, you're not going to abuse it type limitation, and so, don't hold us accountable if some of the data you get back is incorrect. But so you just log in, and then it'll give you a key. You copy that, and then you can paste it into one of these spreadsheets. So that's where you go. That's where you go to get it. So a couple of things about using this. The parameters you pass to the key, you can pass things in a list as well. In this case, you can see for this value here, we've got revenues and sales revenue net. So we're passing both of the. We can pass multiple elements, so you can get multiple elements back as part of a call. So this makes it easy. In some cases, a company will report one part, but they won't report. They may use revenues, but another company may use sales revenue net. So what we're doing in this particular spreadsheet is just a very basic normalization of the data. And we'll just walk to a little bit more of a complicated example just to show you how you can use this. So let's look at margin time series analysis. So this is for IBM. And what we're doing here, if you look at the green, this is parameters that we're providing. The orange is values that have been returned by the API. So all of this data in orange is being returned based on what we put in green. So you can see if we change it for IBM, if we did the Apple example again, if I change this to Apple, then that's going to basically go to the API, pull all this data, and then pull back the margin analysis over time for Apple in this case. But you can put any ticker in that you want here and pull this data back. One of the things the API does in this case, and this is where Google Docs is a little bit different than Excel. If you look at this cell here, what we're doing is we're saying, for this element, for this time period, for these periods, bring back the first quarter, second quarter, third quarter, fourth quarter, 2015, and we want 6 years of data, and it's going to go and pull all that out. Now that's multiple sets of data. So what happens when we put this formula in, it'll just populate down the spreadsheet and return multiple rows of data. So that can actually be really, really convenient. So you only have to do one API call, and you can get lots of data back in one sitting. We have some of these functions here are just standard Google Doc functions or similar to Excel. What these do is just sort it, so we get them in a nice sequence. And if you look over here with these values, this is now doing a call to the XBRL values API again, and this is basically calling this saying, hey, now I've got the periods, go and get me every single value, in this case for revenues, get me all the values for net income loss. This is calculating it. This is a calculation that's being done in the spreadsheet. We put those in grey just so you know what's going on, and then we're obviously charting it. But this is there. You can play with this. You know, anything in green, you can change these. If you want 7 years of data, it's going to give you, you know, if they've got it going back that far, it's going to give you 7 years going back to 2009, for example. So, and you can, the idea behind this is not to, is to basically take these functions and play with them and do different things with them, and you can see what you can do. So I just thought today we'll just go through some simple spreadsheets that we put together, but it's pretty unlimited of what you can do. You can do quite a bit of stuff. So I'll just show you what some of that stuff we've done is, and it might give you some ideas and ways that you can use this information as well. This is a lease calculation worksheet. This is something that analysts do. Basically, when an analyst evaluates a company, they'll take the operating leases of the company and they'll put them back on the balance sheet. Basically, all they're doing is the same that a company would do when they capitalize a lease. They're basically taking all the company's operating leases and capitalizing them. And to do that, so here we go, we've just done it for IBM. There's a couple of things we do. We look at, these are all the future payments that they're going to be making, they're expecting to make on the operating leases. We discount those back, and so we get a present value of all those payments, and that basically ends up going on the balance sheet as PP&E and basically credited as a loan to recognize the liability. The other adjustment you typically do is then you take the operating lease amount, in this case is 1.5 billion. We're pulling this from here. This is the operating lease amount that the company IBM reported. Once again, this is the API. It's going and pulling the value for this element for this period, and then we're basically just putting it in here as, okay, this is the operating lease expense we need to reverse out, and then you've got to split it. So this is where it gets tricky, is I've got to split it between interest expense and depreciation. And to do the present value, we need the present value discount rate. And what we've done in this sheet to calculate that, we've just taken the total interest expense, divided it by debt to give us like an estimate of it. However, sometimes you may not get a number for that. One of the other things we've got over on the right here is, because all this information is reporting in XBRL, all the individual debt instrument that IBM has issued is reported in their financials. We can pull all that information as well. We're pulling the carrying amount, we're pulling the interest rate, the effective interest rate on those, and then we're calculating, what the interest expense on that debt would be, and then effectively calculating a weighted average rate of 2.58. So, they've got a different, obviously they're getting interest expense lower for some other reasons. So we're taking the 1.19. But if you can, for some companies, if you can't get this number, you can go and we're getting a weighted average of all the debt instruments. So we're taking the one we get first, but you can build that in XBRL formulas for this. And you can see we've just got like if and some if statements in here to get that. And then basically we use that rate times that by the PP&E amount to get the interest expense, then allocate the operating lease between depreciation and interest expense. So this works quite well. It can be quite can be quite convenient, because you can, if you're an analyst and you're analyzing companies, you can use a lot of these formulas to build your adjustments and in real time, and then just change the ticker and get this information, which has been hard in the past because you may not necessarily have all the detail where you want it. Just another thing on this, none of this data is normalized. This is just what's been reported. So you can see in some cases we've had to put multiple elements in here, so we get so we kind of do a crude normalization here. Now, if you wanted to do normalization, we just showed, and Alex is going to talk about this later in his presentation, that CalcBench actually does normalize the data for you. And what we're doing here is just taking the as-reported data and adjusting it in the spreadsheet. So here's a balance sheet example for, in this case, we've normalized the balance sheets for different companies. You can see we're getting consistent values across for each of them. If we look at what was actually reported, I'm just going to show both of them. I've just sorted it and filtered it out. You can see this is the values that were actually reported for these companies. A lot of times they won't bother to report a total for non-current assets, for example. So when we're normalizing it, we're just calculating this value, and we're basically calculating it by taking the assets less the assets current to get it. So we have some logic. We have some logic in these formulas, which are basically calculating these values for us, right? So that's the idea here, is to get this information, so in a standardized form, so we can analyze it. Then obviously again you can, if you change these, it's going to reload it, so you get the actual data for it. So, and then once again, all of this, we put the keys down here just so you have them in one place. You don't have to go and repeat them in every single cell when you pull some of this information. So that's kind of like just showing you how you'd normalize the data. So there's a couple of things we've been doing in these examples that you've seen. Is we've just been basically taking we've been using the XBRL values just to pull values. We're using the CIK lookup to pull this data. One of the things that's in this spreadsheet, you can see these are actually text labels. We have another API here, which is called B40. What this one's doing is called the XBRL base element, and that API allows you to basically, is a way to go and be able to pull any attribute about an element and be able to bring that data back. So let's just have a look at this and you can see how this works. So if we look at assets current here, it's basically we've got standard. You can change this to, for example, I want to know what the balance type of this element is. This is just as an example. And so this is pulling, this is a debit. Or I want to see what's the documentation, and I'm just changing this as a parameter in this Google function. And so basically, when it pulls it back, it's just pulling back. It's pulling back, those attributes that are associated with the API. When we're going out and we're actually pulling this data from the API, what it's pulling back is just basically an XML representation of the data. So what you can look at, if we I'll just show you what that looks like. I'm just going to play with some of the stuff here, just so you can see how you use it. So this is the actual API itself. So it's pulling this, it's passing the assets current. If you click on this. This is the actual call to the API. This is what it's calling. It's basically, so we put that call to the API and it's returning this. This is all the information that's coming back to us from the API call. What is the element? What's the namespace? If it's an abstract, what type it is? What the ID in the US GAAP taxonomy? Is it nillable? What is its standard label? And what's its documentation? So if you ever want to be able to go and see what are all the values that are available to me, you can just go and put the URL into a web browser and it'll tell you all the information that's available. So back to our balance sheet comparison again. So we had documentation. We can put any of those parameters that had come back. So if I type it correctly, we'll get it right. All of the parameters that come back start with lowercase. You can see monetary type, but we'll want to put it back to standard. Anything which is going into the API call will always start with a capital letter. So anything with the API is all caps. Anything which is the data that you want to show in the spreadsheet, in this case, is using lowercase, and that's standard across all these APIs. So it just helps to remember, because sometimes the parameters are the same. So that's how it works. So those are the spreadsheets. They're available. You can go and look at them, and they're available online. We've put all the stuff on something called Github, and this just explains what's available. There's a lot of documentation explaining it. You can go and look at this. There's a couple of things where you may want to go and look for things. There's the API folder, and here is each of the individual APIs. You can click on these, and it'll just explain to you what is the format that needs to be. What are the parameters you can provide, what parameters are optional, which there's time parameters, element parameters, etc. What's the minimum you've got to put in? It's a success, what you'll get back when you call the API. So any of these values you can put back into a spreadsheet. And then some errors that you can get, potentially you can get back as well if you don't put enough parameters in. So that's all available on the API, on what's called a GitHub site. The other thing that's available here also is the links to the templates that I went through, so you can see the margin here. If you click on these, it'll open the Google template. If you open that Google template, you're not going to be able to change it. If you want to edit it, you just need to make a copy of it. So if we just do that, I'll show you how to do that again. You just come to Tool, you just come to File, then you can make a copy of the sheet. If you make a copy of the sheet, you'll get exactly the same stuff, and then you can edit it and do whatever you want with it. You will need to get an API. We'll leave this API key available for the rest of this week, but you probably want to go out, get your own API key, and you can just paste it in here, and then you can use it however you want. So I think that's where I'll finish. Sorry, just one last thing on this is we talked about, there's the templates here, there's the margin template. We have some in the lease template in the balance sheet. We have an Excel version. If you're going to play with this initially, I use the Google Sheets. The Excel we have not put any functions into Excel, so in Excel it's using custom functions, so it's a little bit slower than Google Sheets to use. And one of the things we do plan to do is to put some specific functions into Excel to make the performance better. But you can use it in Excel if you want. But if you have any issues or you're interested in making it faster, please let me know, and then we can get some similar functions to what we have Google Sheets added to it. So, Michelle, should we take questions now, or should we go to Alex and take questions at the end?
Why don't we take a few questions? And just one thing, Campbell, I wanted to mention on the Excel is that it requires Excel 2013. So if you have a previous release of Excel, it's not going to work with that template. So go with the Google Sheets if you don't have an earlier, or if you don't have Excel 2013. So we have received a few questions, Campbell, and the first question is, let's see, a lot of questions actually. Do you populate data from the XBRL files themselves or from a database? Maybe you can explain that link.
Okay, yeah, so I can explain that. So the way that this works is, yes, we're taking from the XBRL files themselves. The XBRL files come to the SEC, we read them, we take those files, we load them up into a database, but when we're calling the data, we're calling it from the database. So there's an interim step there. The reason it goes into a database is that just means we get better performance with all the information coming back. It also means you don't have to go, we can get data across, lots of filings simultaneously. We don't have to go and open all those XBRL filings individually. That would take a little bit of time. The database itself is, which we're making publicly available itself, is basically based around XBRL. It's basically a representation of XBRL in a database format.
Thank you. Campbell, we've got a couple of questions about, will these toolkits be made available? And yes, absolutely. We will be sending, we'll be posting this on our website, and we'll send links out to everybody who registered for this event, directing them to the page where they can access both the API key and the toolkits themselves. Now, some other questions. Would it be possible to talk about footnote tagging and how normalization can be automated? How much manual processing is needed, or can it be fully automated?
So on the normalization question, maybe we can leave that to the end because Alex is going to talk about that.
Right.
And he can probably talk about what CalcBench does. One of the things that, I can just give you something quickly here, but one of the things that, another template that we have that's not available, but this is just showing that we've done in-house, is just, this is the income that you can, pull out some of these APIs, allows you generate the income statement, and then you could, if you wanted to, you could write a lot of logic in an Excel spreadsheet that could do normalization for you. So there's different things you can do. Obviously, I think maintaining the spreadsheet is probably not the best way to do it, but I think you probably want to do that systematically. But Alex can talk about that in more detail.
Okay, great. Yeah, we do actually have a number of questions about normalization, so I'm going to go ahead and thanks Campbell very much. We're going to switch it over to Alex right now. And Alex, I'm going to make you a presenter. And then if you want to take yourself off mute and go ahead and take control. Okay, great. We can see your screen now, but we can't hear you yet. So.
Oh, that's better. I was just going to type in here. I am being muted by a presenter, which was not me. But you can hear me now? Hello?
Yes. Yes.
Okay,
we can hear you now.
great.
I was on mute.
Okay, great. This is Alex from CalcBench. I am one of the two co-founders of CalcBench, and we've been at this for about 4 years. I work out of Cambridge, Massachusetts, and we have another few people who work in New York City. We run a website-based and Excel-based XBRL data analysis platform. We work on a freemium model, meaning that some of the things you're welcome to come and use the website for free. And other things, we have a premium suite that we charge for. What do you get for that? We have a bunch of cool tools that help you really dig deep into the detail and the power of XBRL. Campbell and Michelle were talking about normalizing or standardizing metrics. I can talk about that in a minute. We also do a lot of error correction and inconsistency correction from the information coming in the door first before it even gets analyzed. And so today I want to talk about some of the things that Campbell didn't get to touch on, which is sort of the power of XBRL and why it's so useful, even though there are plenty of other data tools out, even before XBRL came along. One of the great advantages that XBRL has is the granularity in the detail. Basically, what you're getting is what the company wanted to report, and there's a lot of value to having access to that, even though it can also make things more complex. So I'm going to start just by taking a look at, Campbell actually just did this right at the very end, but I'm going to do it again. We're going to take a look at an income statement as reported by IBM. We'll just pick at random. And here you can see, I'll make this column a little smaller. This is all of the years of XBRL data for IBM. So as you can see, it only goes back to 2007, and that is one limitation that we are faced with. But what's great here is that we're looking at everything they've ever reported in the income statement for these annual periods, and we're merging it all together. So you can look at how IBM has morphed or changed over the years in their reporting style. And as you can see, it's almost none. It's been pretty consistent over this time. We have the introduced concept of discontinued operations. It looks like it happened around 2012. Other than that, things at this company are probably the same since, I don't know, 1942 or whenever. But for comparison, let's take a look at a different company, maybe one that might be more complex, and see. Now here we have Sallie Mae, and this is a company that, if any of you have any familiarity, really got tossed around during the financial upheaval a few years ago. And you can see that shows in the income statement. You have a bunch of different changes in concepts that they're reporting. The business changed, the reporting style changed. And this is, I'm not going to get into why this might or might not matter, but an analyst getting your hands on this data, oftentimes it means hand entry from the different paper filings, hours of lost time just typing stuff in. The great thing about XBRL plus our algorithms that combine this info together, it gives you that in just a few seconds, and so people really like this. seemingly simple feature that actually is quite difficult to get in other places. Now, since it sounds like a lot of people are interested in standardization or normalization, I'm going to touch on that next, because this is great for analyzing a single company, but now suppose you want to analyze a group of companies together. That's where normalizing obviously comes in. So I'm going to go, we'll start by looking at our website, and then we can go back down to the spreadsheet. I'll start by just picking Intel, and we'll say compare Intel to its peers. This is some basic metrics here. We just pull up 4 standard metrics, and we have 130 companies that are in the semiconductor business. I'm going to quickly filter this so that we're just dealing with companies with, actually, you know what I'm going to say, assets that are greater than, say, $1 billion. That'll get some of the smaller firms out of the way. That leaves us with 56 semiconductor companies here. And so here we've got basic metrics that are standardized from the income statement, balance sheet, and cash flow statement. We can also look at ratios that are built from those metrics. So, for example, net profit margin. You can sort, you know, all kinds of information can be gleaned from that. But some of this information is a little bit ubiquitous. So where's the real power of XBRL? It's in the details. And so now suppose we wanted to look at some really more granular topics like raw material inventory. We can see who reports those items and get some detail into that. And I'm going to jump back to Excel really quickly and do the same exact thing in Excel. And so we have some specialized formulas that go along with our Excel add-in, but we try to avoid making people actually ever know what they are. So you can just use our helper gizmo here to build the formulas for you. We're going to pick Excel, and we're going to say expand to the SIC group, and we'll pick, again, inventory, raw materials, and here you go. You have essentially that same data that we just had. And now we can just take a look at what happened last year. And so obviously also percentage change might be nice. Now you can take a look, you know, if this is your area of interest, whose inventory, raw materials are changing, why, sort the group by those numbers. You know, this is just a really quick way to get your hand on info to do whatever sort of analysis you might want to do. Campbell did something with leases, you know, that's a popular one, and other types of off-balance sheet risk might be something called product warranties. I'm going to take a look at that real quick for fun. We'll take a look at RO, Rockwell Automation, and we're going to look for our product warranty accrual. Again, I believe this is these are aerospace companies, so I assume this means you've sold an F-16 or a fighter jet to someone and their windshield wipers don't work, so they call you out to fix it. Again, this is a metric that people are interested in, again, like I said, because it's off-balance sheet risk. It's something that it's buried in the footnotes, but you need to know it if you're analyzing a company. And we can do the same trick here. We can look at what it looked like last year as opposed to this year, all very quickly, and all thanks to the XBRL data that's coming in. And so what we're doing here, to touch on the question that Michelle asked before, is we're making, we use a little bit of a smart process to standardize these items, but essentially what you're doing is you're taking a look at all of the items in the footnotes and saying which one best matches up with the definition that we're looking for here. And so we collect footnote items and standardize them that way. And what's great about the process is if a user says, I'm interested only in insurance companies, and I'm interested in this incredibly specific, very granular metric that only insurance companies report, but I need it. Can you get it for me? The answer usually is yes, and we can get it very quickly, because once we understand what the definition of what that item is, you can just pull through the whole database and pull the items out for those companies. And so that's one of the exciting features of the XBRL process. One other thing I wanted to talk about is we've spent a lot of time talking about numbers, but text is also an important piece of this. And I can start by trying my luck here. I'm going to trace this item, and here we go. So what we've done here is I've just said, show me where in the disclosure this number actually came from. And so we've searched for that company, that number in the disclosure, and this is actually textual information that you're looking at here. This is reported as a text block, not as a group of numbers. And to look at that in more detail, I'm going to switch over to our text viewer, our footnote text viewer. And I'm going to, again, pick companies similar to Intel. And so what's really interesting about this is, not, in addition to tracing a metric like I just did, you can also quickly read about certain concepts across a group of companies. So for example, if you're interested, again, in inventory, here's the inventory footnote for all these different semiconductor firms that are related to Intel. And you can see, not only what the numbers are, although that seems to be the primary piece, but you might see if there's something special or unusual about the way that they handle inventory. And this, this is something that's time-consuming to do if you don't have access to this kind of tool. You have to open up all these filings and find the inventory part just to find out that there's nothing particularly interesting about that one. You can also push this button and get the numbers out if you want to quickly put them into Excel again. So with that, that's the primary items that I wanted to talk about. So maybe it might make sense just, Michelle, if you have more questions or if users have more questions, we can address them directly.
That's great. Thanks very much, Alex. Why don't I take some of the questions that have been posed by the audience, and then I have a few questions of my own that I'm interested in talking to you about. Let's see. A lot of different kinds of questions here. But one of the questions I started asking before is about footnote tagging and how normalization can be automated. And I guess to some extent you've really addressed that, right?
Well, I can say more about that. The difficulty with footnote tagging is that it requires, there's no one-size-fits-all process to understanding what's being tagged in the footnotes. Generally, it requires you to know something about the particular topic that's being discussed. So if you're looking for information coming out of a pension plan, the way that you might standardize that data is likely different than if you're talking about inventory or leases. It's just because there's no one-size-fits-all way to address some of these more complicated topics. They've been modeled carefully by the FASB, and the disadvantage that we in the receiving end of the XBRL community are at is that many of these topics were, they were created and rules were made for them many, many years before XBRL ever existed. So it's impossible to make companies change the way they report things just to make it fit into XBRL, obviously. So as a result, you do get a little bit of an inconsistency. If you're looking at the way that people report fair value items, it will oftentimes be, again, it requires you to know a little something about that topic before you can standardize it with any confidence. And so what that does, unfortunately, is it precludes you from creating a little routine that just standardizes all the points that you want. You have to spend a little bit of time on each topic first. Does that make sense?
Yep, absolutely. Next question is it possible to override CalcBench's standardization and create your own repository of adjustments if you choose to?
We've talked about that as a possibility. It's not currently possible, but it is possible to pull raw XBRL data out of our API and then try to start standardizing it. But that would be a little bit of a slower way to get around that problem. We've talked about doing something a little smarter than that gives you access to all of the related information, and then you can standardize it how you like, but we haven't gotten there yet.
Okay. The next question I have, which is also a normalization, is how do you determine the try order for items like net income loss?
So one of the interesting things about XBRL is it comes, within each filing comes a lot of metadata. So you have the information that's necessary to recreate the way the income statement looks on a piece of paper, which is useful in some of these calculations. You also get the calculation relationships between the elements. So you get, for the income statement, it'll tell you, what element is parent of what other element and what the calculation relationship, whether it's positive or negative, is. And so when you take that information in and use it as part of the analysis, it starts to become more clear what element belongs where. So Campbell mentioned, for example, sometimes people will use one tag for revenue and sometimes people will use a different tag for revenue. Just knowing those two tags does not necessarily tell you which one is the main, revenue for the whole organization and which one is the subtotal. So, but you can combine that additional information I just mentioned, knowing the presentation order and the calculation order of those tags, and then suddenly you do know one is the parent of the other, and that the parent, if the parent is what you're looking for, then you can identify it.
Okay, great.
It does take a little bit of knowledge of the inner workings of XBRL.
Right. Okay, I'm actually going to make myself a presenter and show the slides again, but we have a few more questions I want to cover. Alex, the question is the data goes back to 2007. Is that correct?
That is partially correct. You may have a better grasp on the rules than I do, but I can tell you that the XBRL standard was phased in. So what are known as large accelerated companies like your Microsofts of the world started. Actually, Microsoft was a voluntary filer, as I recall, so their data may even be sooner than everyone else's. But the Fortune 500 companies, let's just say, started around 2007, 2008. The next phase of companies started a year or so later, and then all of the companies were required by, is it 2011? Am I getting my dates right? So it will vary depending on the size of the firm you're looking at.
Okay. Okay, great. Next question is there a user guide that you have available to learn more about CalcBench's functionality? Do you have that on your site somewhere?
We don't have a single user guide. We have a resources page which has a bunch of user guides and videos, but we have tried to design the site more based for ease of use rather than rather than requiring someone to read a lot about it before they have to use it. But we do have a chat, functionality too, so we encourage people just to ask if they're having a trouble with something.
Okay, and the next question, this I think, applies to both CalcBench data and then also just general SEC data, so either one of you can answer. But how is the accuracy of the data checked? Maybe if you want to address that one first, Alex, in terms of CalcBench, and then Campbell, if you want to touch on that, on accuracy of the data.
Yeah, so it goes through a few stages. The first check, a lot of companies actually use the XBRL US consistency suite to check their information before they submit it, and the SEC as well does certain checks that will be performed before a filing is accepted. So certain items will, as far as I understand it, result in the filing not being accepted and something has to be changed or fixed. So from our end, we concentrate on different items that we know are able to sneak through those checks. In particular, errors of scale can be a problem, and sometimes errors in dates can be a problem. So we have a number of routines that run as information comes in and checks for all those items. And when flags are generated, we do have to hand check a lot of stuff and just make a lot of corrections by hand in order to maintain a clean data set.
Okay. Okay, great. Campbell, do you want to touch on the data quality?
If you could just put my screen on, just show my screen, that would be great.
All right.
So just one thing on data quality. In terms of some of this stuff, if you have these spreadsheets and you're doing a filing, you may want to use some of this and go back and look at your filings and see, okay, does it work in these type of ways that people would consume data? One of the things here we found, and we built this sheet, was just around the operating leases. There's a tag for operating lease expense during the period, and you can see lots of people created extensions for it. So if you put your ticker in here and you go, if you just downloaded this and put the ticker, if you're a filer, for example, is on the call and you wanted to do that, you can look at it and you can see, oh, hey, is there an issue with this data? This data, of course, is the data that's actually filed with the SEC. You can't check it before you file, but you may want to go back and look at historical filings and you can see, does it make sense? The second thing that XBRL US has been doing, and is we're involved in a consortium, it's the XBRL US Data Quality Committee, which basically is responsible for looking at a lot of this data that's been filed with the SEC and seeing problems in the data, and then publishing out guidance on how to tag this information correctly, and then also providing rules that people can run. And you can learn more about on our website about that as well. And that's another initiative we're undertaking from the industry side to try and get consistency of the data being filed. But I think if people, the more people look at this data, and if you're a company and you're involved in corporate finance, or you just want to see what other companies are doing, or you want to even look at your own filing and check the sanity of it, these type of tools are really useful for you, and you can help you see that kind of stuff. And one of the things that we've done with this initiative is we're making this available on GitHub. If other people have sheets or spreadsheets or whatever that they've created, the intention is that people can share those, and then people can see, how people are using the data. Michelle, next question. I don't think we can hear you. Alex, can you hear Michelle?
I can't either, no. Sounds like you've impressed her with your answer. You've made her speak.
Okay. Sorry about that. Here, I'm back again. Okay. I just want to mention that the URL that was shown on the previous slide is not yet live, but it will be live either later today or early tomorrow morning, and we'll be sending that link out to everybody. This is the presentation that's happening, or development that's happening as we speak. So we're just getting all this content available for you today. The next question that I have for you, Campbell, is how is it possible to compare data from different companies if some of them use extensions? These are tags not belonging in the US GAAP taxonomy. And that's actually a question for both of you, really.
Okay, so I can answer that first. So one of the things, in this lease worksheet, for example, one of the things we've done is, in some of these areas that we've gone and done analysis on, and we have another one for unremitted foreign tax earnings as well, is sometimes you bring up the data for a company, and you see that they're missing stuff, and then we create lists of what are the extensions when we're trying to look at this data for these companies. And this is what a lot of people are doing at the moment, trying to consume the data, is they go and they basically have to track what all the extensions people are using for this and then map them into their process. And you can see in this lease calculation worksheet, that's effectively what we've done. You can see there's a couple of tags here for operating leases, and what some of these represent is as extension tags. The operating lease rent expense, including contingent rentals, for example, that's a tag that someone's used as an extension. We have an API for that. If you put that into the XBRL extension element API, that'll tell you this element. It'll tell you which companies have used this element and what values they've used it for. So, everyone, when they're trying to use this data, this is why extensions create problems, because every consumer of the data has to kind of track what the extensions people have used for standard elements. So extensions for standard elements are not a good thing. However, if you look at just looking at this example here on the right-hand side, you can see these are all the debt instruments that IBM has defined. These are all extensions, but this is totally fine. We know where it's got an anchor. It's anchored to the debt instrument axes. We're basically what this is doing here is what these functions are doing is basically saying, look, go and get every single element that's on the debt instrument axes and then pull back these values for, I don't care if they're base elements or extension elements, pull them back, and then I know what I expect to see on that axis, and then I can get all the associated information with them, the carrying amount and the percentage, so that I can get, like in this case, calculate like a weighted cost of all the debt that IBM has on issue. So depending on what the extension is, in this way, in a simple spreadsheet with some simple APIs, we can actually deal with this. In the case where companies have gone and created extensions for an element like lease and rental expense or existing taxonomy, we just have to individually track those.
Thank you. The next question is, what is the best tool for scanning all stocks to find those with particular characteristics? It's kind of a tough question, because I imagine you have that in CalcBench, right? You can scan all stocks for particular characteristics, right?
Well, we certainly can scan for characteristics, keeping in mind that we're limited to items within the financials and the footnotes. We don't, there are plenty of characteristics people scan for that we don't cover. Fluctuations in stock prices would be a good example, or management compensation, which isn't covered in the XBRL mandate yet, but you're welcome to advocate for it, as I am. So, yeah, if you're screening based on financials, we certainly can help you with that, either in Excel or online. It all depends on what it is that what you're trying to screen for.
Right, right. Okay, and this is a question, I think this is for Campbell, and it's about some of the data that's available. Is the market cap calculation and the share price included in the screens, is that real time?
Yeah, so because this is Google Sheets, what we've done in here is we're mashing together different types of data, right? So here, the market cap this is being called from Google Finance. The price is being called from Google Finance. I think the shares, and I think we're pulling some of this data from, this one's coming from Yahoo Finance. This thing here is coming from someone else. So what we're doing in this spreadsheet is we're effectively taking data and we're kind of mashing all this different data together. Obviously, all these numbers here are all coming from XBRL. So, the intent of this is to show how you can pull all this, how you can pull all this data together. And like if I change this to Apple, for example, it's going to go out, it's going to pull it, and this data is being pulled from various sources. But things like the spreadsheets is quite kind of nice because you can basically you can pull a lot of this data from different places and get it. So it's obviously pulling the icon, it's pulling all the debt instruments. So what we're showing here is, it's going to be kind of useful to go and pull this information. So some of this information is real time. Obviously, the market cap and shares are, because it's coming from Google Finance. The XBRL data that's being pulled here is only as late as what you're specifying. In here we're only specifying 2014 year end. So obviously I'm not going to do 2015 because they haven't reported the year end yet. But in the APIs we've provided, we've basically put the years. In the API, however, it does support, you can basically pull all years of data that's been reported, and then you can just pull the latest value that's been reported as well. You can specify that in the API. So we have something called Ultimus, which is an attribute there, which will give you the last value that was reported, and then you can pull all of the data that comes back in sequence of when it was filed. So you can also pull back the the data from the latest filing. So you have the ability to get the latest data that was actually filed in an XBRL format as well.
Okay, thank you. We're going to take one last question, and then and I'm actually going to take over the screen because we're going to take this one last question, but then I also want to share with everyone an event that we're holding November 4th in New York that is free to all attendees, and it's going to cover a lot of this and more, and it's going to have a lot of really interesting speakers. So the question, the final question for our speakers is, how often are people or investors using XBRL data to make investment decisions? What kind of trends are we seeing in the market? I don't know who wants to take that one on first.
I'd be happy to give a stab at it. We certainly have a number of people coming in from the investment world that use our platform to make investment decisions. Naturally, you can see why the richness of the data would appeal to certain types of investors that are really interested in the details of the footnotes and looking for unique and hard to find items. So people that do forensic accounting style investing and that are natural early customers for us, but we've definitely seen it expand to more mainstream people who just want to do income statement balance sheet analysis. They want to do basic company screening. Some of the appeal, that XBRL and we can offer them is the speed with which the information gets updated. The price, obviously, is much lower than some of the high-end Wall Street tools that you hear about, and also, as over time, the fact that we don't have as much history has been mitigated over time as our history has grown.
Yeah, just on that, I think, in terms of the data, that we have lots of people asking us how do they get the data, and that's one of the reasons we've made this available. What we're doing here is really for, like retail investors, so people, if people want to use XBRL data, there's no barrier to entry for them. The thing to remember, however, is it's just the people who want to use this data is not really only confined to investors. I've been surprised how many people who want to, like investment bankers or whatever, want to use this data for things like, oh, I want to see, what derivatives portfolio is, so maybe there's a bit of derivative strategy. Remember also on the corporate finance side, how are other people using this data? What, how could I be structuring my deals? Like we've shown the spreadsheet with the lease worksheet. The other thing we were just working on was just like a merger analysis. I take my company, I've got another company, you put tickers in. What would be the result if I merged these two companies? Would I get accretive EPS? Would my EPS go up? And so then that you can use this information, if you're in the corporate finance department of a company, to work out, how can I be restructuring my, there are certain types of deals I could be doing to get a better economic position if I did a merger with another party, or what kind of deals are other companies getting? Like if you look at Apple here, for example, in this thing, if you look at their debt, their average, percentage interest rate is 1.53%. If I'm paying 5%, clearly I'm doing something wrong. Or maybe, maybe there's things like what are these companies doing where they're getting a much more effective interest rate. So I think this information is useful for anyone, not only investing in the company, for people who want to, do analysis for industry, people who want to, sell services to companies, people who work in the global finance department of, in the finance department of companies. So there's a rich range of people, and the people who have been asking for this data and looking at it, we kind of get a wide variety of people who are interested in it for whatever purpose they may have.
Thank you. Thank you very much, Campbell and Alex. That was a great presentation, really helpful. And I wanted to mention to our attendees, what you see up on your screen here is an event that we're holding November 4th, and it's in New York City. It is free. It just requires registration. And it's being held from 2 to 6 in the afternoon, so it's close to the end of the stock market closing. And it's going to be followed by a cocktail reception. It's going to be held at Baruch College, and they're helping us, they're sponsoring this program as well, along with the CFA Institute and the New York Society of Securities Analysts. And we're going to be, covering a lot of information like we did today, with different kinds of toolkits that are available and different ways of doing analysis. But we're also going to have some panel sessions featuring speakers from the SEC, from the Office of Financial Research at Treasury, from the FDIC, Bloomberg, Credit Suisse, the CFA Institute, and S&P Capital IQ. And our keynote speakers for that event are going to be Sandra Peters. Sandra is the head of financial reporting policy at the CFA Institute, and also Hal Schroeder, who's a board member of the FASB and who was previously a portfolio manager. So they have a lot of interesting things to say about kind of the status of structured data and how we can all improve financial analysis by using XBRL and structured data. So with that, I want to thank everybody for joining us. We're going to send out the replay to the program along with information about how you can access the toolkits that were presented. And we'll also be sending links to CalcBench so that you can get on and use that tool as well. And if any of your questions were not answered during the call, we will be getting back to you. So thank you very much, and we hope to see you in November.